One of the most common questions new traders have is, how do I spot what direction the market is trending in so that I can look for potential trading opportunities and be on the right side of powerful market trends? Well, in today's video, that is exactly what we're going to be discussing, and make sure to hit the thumbs up button and subscribe as we get into it. So in this video, my goal is to show you a couple key ways and relatively straightforward ways that you can better understand the current directional trend that the market is in. Are we in an upward trend, a downward trend, or a sideways range or lack of a trend? So one of the easiest ways I know how to spot trends is by using simple moving averages. If we head over to our indicators tab here, what you can do is we can actually search up any indicator that we want. So let's just say we search up moving average, and this moving average simple, we can click this. You can see I've already got it favorited for future use. And we can now exit out of this. Now you can see it populated with this blue line across the chart, but let's say I want to modify this slightly. Let's say, for example, I'd like to change the color to a bright red, or let's do yellow because that's a little easier to see. And I can make it a little bit bigger. And then what we can do now is we can also go to the inputs tab and we can change this to, let's say, a 20 period moving average. Now this is a simple moving average as opposed to an exponential moving average or a weighted moving average. Those are also things that perhaps we'll do future videos on. But if we just click OK here, what you can see now is that we have this yellow smooth line going across our screen. Now, when traders use candlestick patterns, which can be, of course, or candlesticks can be a very popular approach to viewing the market, one of the downsides to candlesticks is that they can be very sort of erratic looking at times. But what the smoothed out moving average, or the SMA, the simple moving average, does for us is it smooths out what the price action that we're seeing in the candles is actually kind of looking like. So you can see in this case, there's clearly an upward trend. And just by looking at this moving average, you can see that we are clearly trending up, and then we turned and we started trending down, and then we sort of went up, started trending it down again. You can see that it essentially adds just a filtered out version of price action, showing us the general market trend here. Now you can also see there are times when the moving average kind of goes sideways and back and forth. We would call this less of a trending environment. Now, of course, when the chart really gets going one way, we get a more decisive trend to the upside. So a simple way to spot trends here would be to apply a 20 period moving average and to simply say, is price moving below the moving average, in which case we would call that a downward trend, or above, which we would call an upward trend. However, with moving averages, there is another step that you can take that some traders prefer to do, which is to actually add a second moving average to add another filter. Because what we can see here is that sometimes you get these false signals. For example, when price moved up above this moving average, what we saw is price ultimately did not start trending to the upside. It briefly traded above, then started to trend down again. So if we add a second moving average by clicking here, what we can do is we can actually take this and let's do a 50 period moving average in this case. And I'm going to change the style around this time. Let's go for a light blue here. We'll make it a little bit thicker so we can see it. And then if we go to our, let's see, everything looks good. And now we're good to go. So now what we've got is we've got two moving averages on our screen. And what's really nice about this is, remember, we have our 20 in yellow and our 50 period moving average in blue. Now, all this is telling us, guys, is that we're looking and saying with this yellow line, we're looking at the last 20 bars and we're getting the average price between that last 20 bars or candles. Same thing with the blue, except we're doing a 50 period look back. And the idea is it's essentially smoothing out price. Now you can see with this blue line, it's even more smooth than the 20 period moving average, as it's taking into account more data, more candlesticks. Now, there are pros and cons with each. Let's quickly go over them. So with the 50 period, which is a smoother, slower moving average, you can see that it is a smoother and less noisy signal. However, the downside of this one is that it can be a little bit slow to turn to new trends. You can see it only really started trending down by the time the market had already started moving down. Whereas with the yellow moving average, the pros of it are that it can be a little bit more sensitive to new trends starting, but at the same time, it can also give you some false signals and some noise. So the idea that many traders who like to use moving averages to spot trends can do is they can then combine the two signals and use what is considered a moving average crossover. So in this case, what we're doing for our filter would be if the yellow moving average is above the blue, essentially our fast moving average versus our slow, right? And those are terminologies that we're going to want to remember here. So the slow moving average is our 50. The fast moving average is our yellow 20 period moving average. Now, the idea with this is that the fast moving average outpacing and moving higher here versus the slow moving average gives us an idea that the market is now trending to the upside and there's a more confirmed signal. Now, of course, this is still not a guarantee that the market is going to trend higher, and there are still false signals that can come out of this. We'll take a look at some examples in just a second. But what you can notice here is that we had a nice confirmation that the moving averages had a line to the upside. There was a nice little trend that followed, and then you can see we actually got the signal here right around this level that the trend, according to our simple rules, had reversed to a bearish one. And you can even see that in this example right here, what we can see is that the moving averages remained in a downward trending direction signal, even though you had price moving beyond those moving averages. The crossover was really what we were looking for, and we did not quite get that. So that confirmed that we are still in a bearish trend according to our simple sets of rules. And for full transparency, you can see this is definitely not a perfect signal either. Here's an example where we moved lower, but then the price actually started to go higher. We flipped back into a bullish signal very shortly after. So nothing is perfect, and moving average crossovers are typically going to work well in an environment where the chart has been trending much more decisively. So when we get these big trends, this can be a really good signal, but of course, when the market is moving sideways, this signal is not nearly as strong. The second way that I really like to spot market trends is to use the textbook examples of higher highs and higher lows. So for example, what we're doing in this case is we are spotting situations in the chart in which the market is consistently putting in a series of, like I said, higher lows, where the lows of each move are, essentially higher than the previous, and then also higher highs, right? So the new highs are higher than the previous ones. So we can see that in this, for example, this Euro US dollar chart that I'm looking at, we're putting in these higher lows and higher highs on this chart and overall trending to the upside. So this is a way that I personally really like to look at the status of the market. Are we trending higher or trending lower? And so when we have these higher highs and higher lows, that is a signal of an upward trend. Going back to our US dollar versus Singapore dollar chart, what we could see in this case is that we also have sort of lower lows and lower highs forming in this market, right? So we have in a situation in which we are putting in fresh lows consistently, and then also sort of putting in those lower highs as well. Spotting trends in the Forex market is a really important skill to have as a trader, and I hope this video was helpful in outlining that for you. If you enjoyed this content and you would like more trading tips like this in the future, make sure to subscribe to this YouTube channel. Thanks for watching, and we'll see you in the next one.